Could the Chinese Titan companies get delisted right off the New York Stock Exchange? Today we'll break it down for you. It's going to be a big one. My name is Paul Barron. Welcome back into Tech Path. I do want to thank our sponsor. That is Coinbase. Coinbase is a great place to get started in your crypto journey. Right now, you can earn 50 by just buying 50 in crypto. So just go over there, sign up. One of the things that they have that I think is one of the better services is a product they call Coinbase One. It's zero trading fees. You also get more out of your membership, which gives you boosted rewards, priority support, and a lot more. So it's only like, a little bit a month. You guys don't have to spend a lot for this, but it does give you some additional benefits over on Coinbase. You can get a free trial right now. It's very simple. Just go over to the main page on Coinbase.com, go down to Coinbase One, click the free trial, and go there. All right, guys, let's get into it today. I want to open up with a big clip, and this first clip is going to get into some detail around something they call the golden share. And I'll let the clip explain it, and I'll talk a little bit about it after. Take a look.
If you own stock in a company like Tencent, you own a share of a contract of something in the Cayman Islands that is trying to approximate stock ownership. This is the so-called golden share.
This loophole has funneled billions of dollars in American savings to Chinese companies. And this loophole also exposes American investors to Enron-like frauds, Chinese military companies, and companies that support egregious human rights abuses. The Select Committee also found that numerous Chinese companies on our exchanges and in index funds are on government prohibition lists.
I believe Congress should act to delist CCP-affiliated companies until there is a parity of treatment.
We joined the Select Committee in asking Congress to end this legal fiction and delist every VIE from the exchanges.
If we can't own stocks in their country, they should not be allowed to own stocks in the U.S.
If we see delistings of some of the biggest companies, Alibaba, BYD, Xi Jinping, there's so many different projects and companies that could have a major effect right now, not only on the Chinese economy, but globally, this could have a monster effect. Take a look at this next clip because it'll get into where this dominoes would stop. Take a look.
What percent of investors are even aware of this?
If I took 10 people in the hall outside here and asked them, do you know what a VIE is? They'd say no. Do you own one? I have no idea what that is.
Right.
Guesstimate that between 700 and 800 billion worth of market cap. I'm happy to come here and scream about it. Who would want to invest in a company like that? Do you think I could raise any money if I disclose that? As I have a golden share in my structure that only I can decide all outcomes on every single issue?
If Kevin sells his shares of his public company, you have to disclose it immediately. Yeah. Right? They don't have to do that. A foreign insider can sell all of their shares in the company from day one to day two, and you're not going to know about it until the stock price just keeps going down as information leaks out. Who gets harmed by that? In private equity, in pensions, it's in mutual funds. Any of these that hold Chinese companies can go to zero tomorrow if Xi decides to do so. And I think that's what the scariest thing is from my perspective.
Why are they trading?
This is a huge development, but the fact that we're starting to uncover these things, we just did a video on Meta yesterday, what we found out, and that was mind-blowing. Go back and watch that video. It'll get you upset quickly, but the point is that there's a lot of things that have been happening that are just bad actors that have been abusing the United States for quite some time. This is definitely going to draw them to the U.S. for negotiation. Now, I don't know how much of this Trump and the administration is going to let them get away with, because I think now it's kind of the toothpaste is out of the tube now. There's just no way back. This is getting into another scenario, and that is the IP concern in terms of how China has been treating that. Take a look at this clip.
We're letting them take this capital if they raise in these markets, that we can't do the same thing there. We can't litigate there. We can't protect our IP there. They use the courts, the American court system, to litigate my companies after they steal the IP and knock the product off. And they don't even have to pay the compliance costs. And still I have to compete with them. What's wrong with this picture?
Are there any private companies in China that have the ability to refuse a request from the CCP over business decisions under this structure?
I'm sure they have the right to do that, and then you don't hear from them anymore. This is a cancerous tumor in our financial services system, and we have good doctors here. Chop, chop, let's just cut them out.
I like that. Chop, chop. Let's just cut it out. A couple of things that could be playing into this as well. Remember, there's an architecture, I think, that's being built around this new financial system. You've got Scott Bessent in there. Obviously, you have now Paul Atkins, who is now confirmed by the Senate, taking over at the SEC. There are some unique nuances here that could be connecting the dots around all of this, around delisting, and it could have been underway for quite some time. Let me go to this next clip. Take a look.
Why are they still allowed to trade on our markets when we know so very clearly that these dollars are being used against us?
Well, hopefully a new sheriff in town 48 hours from now, they won't be. When Atkins comes in here, he is the steward of these laws. We're going to see a lot of these delistings, and I'm looking forward to it.
That's been now long running for, maybe almost a decade or so, but it's finally coming to a head. And so either those companies are going to have to put up, or they're going to have to leave, their listings here and go elsewhere.
They're going to get delisted. And I don't know why this is going on.
I know why it's going on. It's going on because Wall Street firms make money on it, okay? That's why it's going on. Because they want to make money selling these stocks to the public. And they want to make money raising money for Chinese companies. What else? How else is it going on? That's how it's going on Wall Street.
All right, guys. Well, I think the jig is up. I think we are at now a point in time in which this administration has pretty much drawn the line. Now, how much will this administration sell out the American investor is the question. Because if they don't follow through on this and actually move into a position that does level the playing field, I think this would be a bad loss for Trump. Now, the question is whether or not he will do this. Now, this also has an effect on another major deal that is right in the crosshairs between China and the United States, and that is TikTok. Take a look at this clip.
How did those risks affect the bid that you constructed?
TikTok is the most unique situation in American corporate history. We've now given a new 75-day period. I doubt there'll be another one. Now we have clarity. Whoever's going to buy TikTok is not going to buy the algorithm, period. No algorithm. And I think that's great that you've done that, because it makes the competition much more in focus.
Does Xi Jinping have a golden share?
100% he has a golden share. There's no other way this deal's getting done. I think that's the case for hundreds of companies that have raised capital in the American markets. You may not like that. I certainly don't, but I respect it to be a fact.
Tom Cotton went on and he basically said, listen, guys, this deal with TikTok is going to stand and there's not going to be any BS deals. Take a look what he had to say.
Reserving the right to object because I do object to this effort and will object to future efforts to change the TikTok law. Many American businesses and investors are apparently interested in buying TikTok, but reports have surfaced that some businesses and investors want a bad deal. These potential buyers may ask Congress to somehow indemnify them for violating the law. Let me say bluntly to any American who wants to invest in some half-assed TikTok deal, Congress will never protect you from going into business with communist China. So American businesses and investors who want to dip their beaks in the golden TikTok fountain should think twice. Let's allow President Trump to negotiate and see if communist China is willing to make a deal. If not, then the law is the law. If the TikTok deal maintains any operational relationship with China, you'll be stuck with the consequences. Caveat emptor.
All right, so listen, guys, this is a big deal because of the fact that you're talking about a $5,000 per day fine per user. There's no company out there right now that would be able to withstand that kind of headwind. It is a big deal, and this, of course, is at the center of where we could see a lot more market volatility because of these delistings, which looks as though they're going to happen. So I want you to think about all the top companies that are Chinese companies that are listed on the New York Stock Exchange. The potential alternative to that in the American version, or possibly even either other global versions of that, may end up being the benefit of this. Obviously, Congress is behind the situation of the legal side of TikTok being banned, but also now what's happening is the market is starting to speak, and they themselves are also behind what's happening with the Chinese specifically. It appears that they were against what was going on worldwide. That's obviously why we've seen this pause on tariffs. Take a look at this next clip.
While we've been sitting here, my phone's been lighting up. The market's up 3,000 points. Although chaotic, is getting organized. But now I'm starting to see what's happening, and so is the market too. The world is one thing. China is completely different, and all of us that are involved in dealing with this and competing with it applaud it. I can assure you, I'm the voice of millions on this that have been doing business there. A lot of people don't like the style of the president. I get it. The way I look at it is I don't focus on the noise. I focus on the signal. What I'm hearing is enough. Although, watching the market go up and down 3,000 points a day is people gnash their teeth. But if that's the price, it's worth it. Finally, here we are with tariffs being the excuse. But now I think she has to come to the table. And I'd like to see tomorrow morning 400% tariffs. You're going to get delisted. And that's going to be billions of dollars getting evaporated off our exchanges. If you do that, believe me, those boys are coming over here on an airplane. You can't cut off people from the United States market, the largest on earth, and capital markets without a consequence.
Amen to that one. China's response to U.S. tariffs, a little bit misrepresented. Here's a piece from Kobayashi. China will ignore further tariffs, the increase, because it's already impossible for the Chinese market to accept the U.S. imports and current tariff levels. Basically what they've said, doesn't matter. We can't even go and do business in the U.S. right now at the base that it is. Now it's just narrative and signal coming across from the president, simply saying that the difference is if these stocks are delisted, this changes the dynamic. It is no longer a percentage of a tariff on a dotted line. This is changing the very economic structure of China. This is a huge one, guys, and it's going to be affected, I think, going to be pretty quickly in play. And I think this is where the market is going to be going because the volatility, get ready for it, is going to happen. Let's go to this last clip. This is China's response to what we're doing. And then Scott Bessent had a few things to say. Take a look.
The US has the bigger gun, and so China ends up having more to lose from this trade war, doesn't it?
Not at all. China is fully prepared to fight to the very end. If the United States wants to go in that direction of completely shutting itself out of the China market, be my guest.
Yeah, and China will lose the US market, which, as I've said, is 15%.
We don't care. We don't care. China has been here for 5,000 years. Most of the time, there was no United States, and we survived. And we expect to survive for another 5,000 years.
Are you willing to go that far to remove Chinese stocks from U.S. exchanges?
They're going to go from bad to terrible. That which is unsustainable will be unsustainable.
There you heard it right there from the Treasury Secretary. It is going to get worse for the Chinese, and it looks as though we may be in a position right now where all of these companies, including someone like an Alibaba, could be on the chopping block. The Chinese listed entities in right now are basically fantasy football shares. Is coming in from Kyle Bass, who's been following the Chinese market for quite some time. I've watched Kyle, and he's been a negative position of the sense of where China has been able to abuse both the financial system and the distribution system of the United States for quite some time. I wonder what he has to say about this. I got to get Kyle on the show. Anyway, guys, let me know how you are playing the markets right now. With all of this happening, markets are going up. People are looking at, hey, maybe everybody is unified now behind the United States. Markets are going to continue to move, and China is the one that needs to bring the final, domino into play. Drop some comments down below. Make sure and jump into the Diamond Circle and follow me out there on X @Paul Barron. We'll catch you next time right here on TechPath.